Good morning, everyone, and welcome to Nadex Morning Analysis. I do want to get into it this morning because we had a little bit of news last night, and the markets are beginning to move. Before we get into it, a quick intro. My name is Todd Rich. I'm with Nadex. As always, I've got our guest, Brian Caprice from Keep Trading Simple. I do need to state before we get into this also that trading involves risk, that any trading decisions are solely your responsibility and at your own risk. And lastly, this is an education session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. So let's there is a lot going on. The news comes out. We've seen some movement in the market. The Dow and the S&P are each up about 1%. So they've kind of broken through some of those levels that we had identified that were some resistance. Oil also up about 1.5%. But then on the other side, we're seeing things like gold and silver. They're each down about 2%. So definitely market digesting the news in different ways in different markets. So, but I think what we're going to cover today, I think the two that we're going to cover and we're going to focus on are the NASDAQ and gold and look at some levels there. So I am going to just, Brian, do you want to start us off with
Sure.
NASDAQ, and then I'll flip over to your charts when you want me to?
Yeah, so you can just flip right over the chart. It just makes it. It just makes sense.
Makes it a little easier. Okay, there we go.
Yeah, I mean we're in a lower volume time right now. Yesterday, again, we're sitting right here. If you guys can see my cursor, we're sitting right here right now. Yesterday, we were sitting right here. Now you can see that the market took a spike up, and you may ask, "Hey, what happened?" That was that flash manufacturing PMI number that we saw yesterday. It came in much better than expected. It was forecast to be 52.5. It came in at 56.7. Okay, so again, that was considered good. Gave us the initial spike. Let's see over here. Initial spike up, a roll all the way back over to an area where we had seen buyers stepping in the past, and then we had a rally kind of back up, and we're exactly in the same spot where we were this time yesterday. So what this leads me to believe is, although there is some emotional moves up and down based off of news, there is no news today as far as U.S. kind of economic headlines, coming along. There was mention of Janet Yellen becoming part of the Biden administration. That's obviously a big deal. The market, got that late yesterday. When we see more headlines and more digestion of that today, that may come into this as well. But right now, we've seen buyers more or less confirm a top in here at 12,000, and then bottom side down here at 1136. And again, low volume week, absence of news. There's a couple different strategies and ways to play this. Dropping it down to a 30-minute, you can see we do have a small level kind of right above where current price is. What one possible scenario is it could kind of rally just a little bit up at the open today. People like Janet Yellen coming across. It could hit this level again. We've seen buyers kind of stabilize and then kind of punch it down in the overnight session. So it could be a short. One thing I want to point out about this one, again, I kind of gave you guys a little bit of a lesson on the curve yesterday. Remember, this dark line is kind of where we pull biases from. If it's high, we bias, we shoot for kind of biases short. When it's low, we shoot for biases long. And you can see exactly how it worked out. As soon as we breached in the upper section where we saw buyers yesterday, even on an emotional spike, it dropped. What did it do? It came right back in the lower third, hit the level, and then turned and rallied right back up again. So, that's why we use these things as, as far as creating biases. But right now, I would say probably expect somewhat of a channel sideways. Again, absence of news, people trying to get out to vacation early. Not as many people looking at the markets this week are kind of setting it up. So there's a few different strategies you could play to use the NQ today.
So indeed, let's go ahead and jump over to the Nadex platform and just take a peek at some of those levels that you were mentioning. And this is that range bound. Here we are with knockouts. Here's those levels, and they are kind of psychological, right? You get that 12,000.
12,000, definitely.
Right, the nice big even number. So if we were to see the NASDAQ rally a bit up into this range, there might be a potential short opportunity. And I guess people would have to determine where their risk reward profile fit if it were to get up in there. And with the knockouts, obviously, oops, I wanted to pick a different knockout. There we go. With the knockouts, With some of the ranges that we've got, you'll have to make a determination on which range suits you best, and then where that risk reward, if it does indeed actually rally up into that area, and I guess we would potentially be seeing some support down there. Also, instead of knockouts where you're not knocked out, maybe you got a little bit more time. We could take a look at the U.S. Tech 100. Let's take a look at some of these call spreads. And there are some call spreads in this range that are right between here that could become kind of interesting. If you wanted to, play it between the range again with the call spread.
You
Even
can see
if
the 30-minute level on that one as well.
Yeah. So it gets kind of interesting. Again, here you hit the range, you're not actually knocked out. There's just a little bit of a premium associated with the price that you're trading. Although
had you been in it yesterday, the 12,000 though, you would have been knocked out on the downside for a full target. So it's always nice to see, when you see the asset. And I know I have many students that ask questions of me. They're like, well, how do they determine the width of the strikes of the the knockouts and the call spreads and things? But had you been in it yesterday, you can see that it again, it did not get stopped out at the 12,000, but it did actually punch lower because there's another 12,000 in there right now, and you can see. And again, the strike differences don't change. But it ended up coming all the way through. So even on a low week, that's what we mentioned yesterday about low volume week. You'll see a lot of volatility. We went from almost the very, very top of the knockout bracket yesterday, the ceiling, to knocking it out all the way on the bottom side in one day. And then again, what happened? It retraced directly to where we were yesterday. So it's one of those things. It just kind of gives credence to why knockout brackets exists. It helps you take care of large moves, gets you your profit, and then again you're ready to trade another day instead of had you been in a weekly call spread, we're at the exact same spot we are right now. No profit captured.
Yeah, unless of course you unwind it.
Yeah, if you took it out early, obviously, yeah. But if you were still holding it right now, maybe
right,
it's in the same spot, so it wouldn't have you would have lost some time value.
Yeah, and that's actually a really important note when talking about knockouts. Binary options or call spreads, the fact that you can always exit your trade early, that you don't have to wait. And then I was just going to, I was showing up a little earlier if people wanted to take a peek. Binary options clearly a most popular product. These $100 contracts, and is it going to finish above or below a level? Yes or no? This could be kind of interesting as a potential opportunity as well. If we were to get up to these levels and you were looking for a rollover, there's things that you could potentially look at. So let's do one other one. I'm going to put it back to you, Brian.
Sure.
You wanted
let's go across to gold because there's been so much gold in that one. So
yeah.
Now this is a little bit of a higher time frame gold chart. This is a 4-hour chart. We mentioned and you guys can see it back here. What is this, back on 9/25, right? We had started talking, and if you catch the Tuesday sessions, which we do have one today, later on today at noon, we talked about if we were able to break through this level over here at approximately 1850-ish, 1847. We expected a little bit of a bounce and then a continued push to the downside, that Harry Potter trade that I mentioned a lot of times. And you're able to see it kind of over here. We had that base and we pulled down. We kind of pulled back and got into it. Looking for that break. Now, big question is, where is it going to stop and what factors are going to drive this to the downside? I want to drag something in, and I think you guys can see this. Let me drag it in. This was something that was released earlier today from the Business Insider, talking about 125 economists urging Congress to send a second round of $1,200 stimulus checks out. And again, $500 for each kid. Everybody's familiar with this one. Looked like we had it earlier this year. With that being sent out, everybody knows that if we start, again, creating stimulus, increasing debt, things like that, what happens is people automatically jump to the inflation side of things. Oh, inflation's coming, gold's going up. Well, seeing this, and again, a lot of people have been talking about it. We're closing more businesses down. Everybody's talking about how COVID is hurting the economy more than anything else. It's hurting, it's on everybody's mind. Stimulus checks are coming with a change of administration. There's obviously going to be a feel-good point. Everybody's going to, again, I do believe that stimulus checks are coming. What that does, though, and again, traders know that as well, the market will send gold down because think about it. And again, this is an adage that everybody knows. Are we supposed to buy high or buy low? And everybody knows you're supposed to buy low and sell high. With everybody saying, we need stimulus, we need stimulus, we need stimulus, what happens is until stimulus is here for the average Joe, gold prices will continue to push lower. Okay, now oil is going higher, which again, there's no demand, nobody's driving, so everybody knows that, hey, listen, there's a big demand crush coming on that one, so let's raise price higher so we can sell it for more. But the exact opposite story is happening in gold.
Hmm.
I do have an area here on the 4 hour, just a bit lower. Now, is it the greatest of areas, as far as analysis goes? No, but it is the start of the last kind of really big rally push forward. You can see that we were chopping around, and then a boom right there. We kind of took off and pushed higher. Is it the ideal situation? No. Do I like levels like this really clean top basing and dropping very long candles better? Yes. But I do feel that there's a few different levels down here, right at that one, the 1777, 1752. I do feel that we are in an area now where we're starting to get down where we start getting some basing. We see a failure to go lower. We see some basing, a little rally up. A pullback that doesn't put a new low in, that could be a potential trigger for us to take this long.
Hmm.
Now, what happened this week with Thanksgiving and everything? Maybe, maybe not. But I will tell you, when there's mention of an official stimulus package going to voting or being put in, those gold hawks are going to come back out again, and everybody's going to be talking about, oh, the U.S. is printing money, inflation is going to get crazy. And the second anybody mentions inflation on any of the news networks, gold tends to go up.
Yep.
It's just a repeatable process. Every time anybody says inflation, the first thing people think is gold. I got to buy gold; it's going to go up. So by it coming down right now, I think this is an artificial kind of destruction of price for gold, only so people could buy it low for when that stimulus check comes and it pops higher. That's my
Interesting.
take on it.
Yeah, interesting. So I'm just going to jump over to the Nadex platform quickly on this one. Uh, Again, you're talking just below another psychological range of 1800.
Yeah, 1800 is a big one.
You're right. So here's some call spreads. This is currently the lowest call spread we have this week. If there was something in
it's
here,
moved a lot.
yeah, I mean gold. I mean it really has. Gold's gotten hammered. And if you were looking for a buying opportunity, this is again, people got to make a determination. Again, with call spreads, you're not knocked out at the bottom level. In our knockouts, I want to take a quick peek because I wasn't quite sure what we had in some of these levels for gold down below. Yeah, we do have some knockout ranges that are a little different. Again, here's one with roughly the floor is around 1800. But people could take a look, and if it were to come down here and you were expecting to see some type of bounce at some point, there could be,
and I think what's important to note about this as well is, you always hear the adage, don't try to catch a falling knife.
right.
That's kind of what we're at right now. We're not quite at levels yet. 1800 is a big psychological level. It's definitely something that's tradable, but you got to make sure you're picking the right knockout. If you put a knockout right at 1800,
Yeah.
most likely it's going to get sucked through just by the nature of the the double zero there at the end. So what I would say is wait till you get some type of a confirmation in the candles is probably the best way to take it.
Yeah, and then there's always the call spread, or
Yeah, you're protected more with the call spread.
right, or the helps if I click on commodities. There we go. There's always ways to play this too, if with some of these binary options, if it were to get down there, something that people could take a look at, and if we'll keep adding strikes lower as it continues lower. I'd like to take this opportunity, Brian, for we went a little longer than I wanted to go today, but why don't you tee up what you're going to be doing later this morning?
So
we do on every Tuesday.
Yeah, and new today in a few hours, we have our standard weekly kind of analysis and breakdown. What we're going to do is we're going to go through many more charts. We'll go through all three indices. We'll break down gold, silver, and oil more in depth. We'll go through the 8 currency pairs that Nadex trades and talk of potential levels. Now, going into the rest of the week, tomorrow will be important. There is U.S. news tomorrow. We have GDP, unemployment claims, and FOMC. FOMC on the Wednesday before Thanksgiving could have some big potential. So again, it's important to make sure that we kind of prepare for the rest of the week, and that's what today's session is going to be doing: is how do we prepare for the rest of the week? What levels do we need to look for? And if you plan on trading through the Thanksgiving holiday, where are places we can take advantage of? And again, that'll be at 12 o'clock noon Eastern.
Eastern.
Yeah, Eastern.
Yeah, Eastern.
Most important.
Yeah. Noon Eastern, 11 Central. So with that, if you need or want to reach out to Nadex, got any questions for us, customer service at nadex.com. Follow us on social media. Highly recommend that you follow and subscribe to our YouTube channel, as we're constantly putting content out there, and you'll be alerted when we do. We do these sessions 8 a.m. Central, 9 a.m. Eastern every morning. Well, except for this Thursday, I think Brian and I are going to take Thanksgiving off. If you have any questions for Brian and you wanted to reach out to him, support at keeptradingsimple.com. Brian.com. He is accessible. So please, feel free to use him as a resource. With that, I would like to thank everyone for joining us. Be sure to join Brian later this morning, and I want to wish everyone good luck in the markets.